I think our guest has also joined us, Amogh sir. Good morning, Amogh sir.
Good morning, madam.
Yes. I've made you the co-host, sir. So if needed, you can anytime unmute yourself or share the screen.
Okay, ma'am. Thank you.
Yes. Vinay sir is also coming. Good morning, Vinay sir.
Yeah, good morning. Good morning, Vishal.
Sir, both Aurora ma'am and Amogh sir have joined us. So I think at 11 we can begin.
Yes,
We'll,
yes,
we'll wait for participants to join till then.
yes, yes.
Shall we begin, sir? It's the time.
Yes,
Vinay, sir?
Vishaka.
Yeah.
Okay.
Okay.
Aurora,
Yes, Aurora ma'am is, ma'am, you are there.
Yeah, I'm here only.
Yeah, so we'll just start, ma'am. So, respected resource person for today's session, Mr. Amogh Gothoskar, Principal Madam Dr. Neelam Arora, Vice Principal of Aided Section Mrs. Vidya Bide Madam, Vice Principal of Self-Financing Courses, Dr. Arun Pujari, and my dear participants. Good morning and a warm welcome to this session on investors awareness organized by the Maths Association jointly with IQAC of our college. We all know that we are living in a highly volatile world and things are constantly changing and uncertain at times. And at times and this particularly is an area which quintessentially portrays this uncertainty of today's time is the share market or investment sector. And so it becomes imperative to have a sound understanding of the fluctuations and even the minutest changes and phenomena of the market so that we can tackle them. Keeping this in mind, we are here today with a program on investors awareness. To begin with, I request our principal, Dr. Neelam Arora Madam, to please address the audience. Over to you, ma'am.
Shaka, you're not audible.
Okay, ma'am, I request you to please address our audience.
Okay, yeah. Okay, well. Hello, yeah. Good morning. I hope I'm audible.
Yes, ma'am.
Hello, yeah. Good morning, everyone, and warm welcome to this investors awareness program. A very, very contemporary topic. A topic which is much needed, as poor investor is often duped and hard-earned money of people is lost somewhere along the line because of lack of awareness. So as they say that information and informed choices will definitely help any person to make a right decision. I'd like to welcome Dr. Professor Amogh, the resource person and speaker for this topic on investor awareness. And I look forward to listening to what are the carefulness or what are the factors we must keep in mind and how we can be alert and not get defrauded. I'm sure this program is going to throw light on all these issues. I congratulate the mathematics department, Vinay and Vishaka, for organizing this program, something which will build awareness and make the people more alert. So welcome all the students and participants, and I wish you all the best. Thank you.
Thank you, ma'am. I now request Vinay sir, our IQAC coordinator, to please introduce our resource person for today's session. Over to you, sir.
thank you, ma'am. Thank you, Vishaka. I am audible.
Yes, sir.
Good morning to one and all. It gives me immense pleasure to introduce our speaker for today, Mr. Amogh Gothoskar. Mr. Amogh has a dual specialization in finance and marketing with more than 11 years of industry and training experience. He has been speaker for more than 230 financial literary training programs conducted across India. He also have conducted financial literacy for deprived classes of society such as sex workers, lower grade public servants from various sectors, organizations, as well as students, parents, teaching and non-teaching staff. He is trainer for financial literacy course for engineering students funded through Technical Education Quality Improvement Program, Phase 3, which is a Government of India project assisted by World Bank. He is a trainer for enhancing engineers employability course funded through Prasanna scheme of All India Council for Technical Education. He is a resource person and a trainer for the Commodities Derivatives Awareness Program conducted under the banner of Investor Protection and Education Fund of the Securities Exchange Board of India. He is a trainer for Investor Awareness Program conducted under the banner of Investors Protection Fund of NSC and BSc. Conducted many guest lectures at the B schools like SIIB in Pune and SIMSRI and KJ Somaya Institute of Research and Management in Mumbai. Mr. Amogh is associated for certain keynotes or key roles with more than 25 education institutions across India. Acted as team advisor for NM College team for international competitions in USA and Australia and secured second rank worldwide and semi-finalist position respectively. He is trustee and treasurer of DEEP-ARCHAN Charitable Trust for enabling individuals, groups, and organizations in problem solving. Last but not least, he is a trainer come organizer for beginner and advanced photography workshop and nature, wildlife, and photography tours. Thank you, sir, for accepting our invitation. And I'm sure everyone over here is enthusiastic and eager to listen to your words of wisdom and investors' awareness. Thank you. Over to you, Vishaka.
Thank you, sir. I now request Amogh sir to please take over. Over to you, sir.
Okay, thanks a lot. Thanks a lot to the entire management of the college and Vinay sir and Vishaka ma'am to coordinate and put this program together. So I'll just start off with sharing the screen. I hope it's visible.
Yes, sir.
Yeah, thanks a lot. So basically, as you see, we are today we are together particularly to have a program on investors awareness. That is particularly a program where an initiative has been taken by the Bombay Stock Exchange Investors Protection Fund to conduct these kind of programs to have a basic understanding about what and how you should proceed, particularly for people who are first time investors or probably who are wanting to take some risk with regards to you can say experimenting in investing in various products that are available and various services that are also available across the Indian capital markets. So majority of you all as participants today are students. So I start with one basic question about what is the reason behind all of us studying. So as a student today, majority of you would feel ki, why am I doing whichever XYZ course that I'm doing? The reason is, yes, I want your answers in the chat box. What is the reason particularly for you all to study as students today? What is the reason? Why are you studying? Your answers in the chat box, please. Let me see how many of you put your answers. Okay, I have the first answer, for better future. Okay, what about others? What is the reason for you to study? What is the objective behind you all studying? Okay, to get knowledge. Okay, fair enough. Money, profit. Okay. Anyone else? To gain knowledge, have a better perspective. Okay. Yeah, anyone else? Any other answers? Okay, so there's one simple answer that you all want to earn money. So a reason, of course, knowledge is there, exposure is there. There will be other factors also that will be there. But the primary reason for all of us to study is ultimately we want to earn money. Now, what is the reason behind earning money or the objective behind is typically because we have a lot of expenses that are going to come up. So these expenses that are going to come up will be two majority types, or two, you can say, types of expenses. One is, of course, which will be common for all, that is the primary expenses, food, clothing, and shelter. And on the other side, you may also have some other expenses, but which may not be common for everybody, but which may go on differing, or which may go on changing depending upon your lifestyle, your earning capacity. Sometimes maybe how much you may want to show it off to others, which is inverted commas, showing off is one of the latest trend that we see in today's world. You go to a restaurant, you go to a place, you go to a picnic, you go to XYZ things, and you click a selfie and put it up. You tag some people, you tag a location, and so on and so forth. So is it really required or not is not what I need to comment on. But of course, yes, that is what keeps on happening, and we keep on seeing it across social networking websites. So point is it really required or not is a question that we should ask our own self rather than discussing it with others. But point is, these expenses are going to be there. So now, one simple thing that we all need to understand here is this earning on one side and spending on the other side. Are these the only two things that are going to happen? The answer is no, of course. Point is, we also need to do a very, very important thing along with these two, or rather, I would say in between these two, that is savings. So savings is what we need to do first after earning money, because majority of us, what we feel is, we first earn money and we spend money, and then we say, "Arey paisa bachega to I will save." But point is, don't do that way. The reason is, if you keep saving at the end and do your spending or your expenses first, point is, there may not be enough money left for you to particularly save. So point is, first you earn, I repeat, then you save money, and then whatever remains you go on towards expenses. So now the question comes, how much should you save? So typically from 100%, if you assume is your income, you should at least try to save 40%, 40, which will leave you with expenses or spending, which will be approximately 60%. Now, the question is, why do you need to save money? So you need to save money particularly because that is going to help you to achieve something which is we call as financial freedom, or also called as financial independence. So our dear Prime Minister, Mr. Modi ji, what he says is Atmanirbhar Bano. Now, what is Atmanirbhar? He's talking about independence, and here we are talking about financial independence. So going a step ahead to what our PM says, we should also look for financial independence or financial freedom, which is what you are going to achieve by saving the money. And of course, I'm also going to talk about it later. Only saving is not going to be enough, because you go on further and you also need to invest that money so that the money grows over a period of time. So this saving will help you to achieve, I repeat, something which is what we call as financial freedom, or also call as financial independence. Now, with this thing, you also need to know majorly about one more factor, which is going to reduce your income. So whatever income you generate, from that income, you are also supposed to pay some tax. Now, what is tax? Tax is ultimately an amount that is to be payable from your income, variety of income that you generate. So what would be the variety of income that you generate? Some of you may say, sir, I want to start my own business, or I want to become an entrepreneur. So for them, there will be a business income. Some may say, sir, I will do a job. Okay, so you'll have a salary income. Some of you may say, sir, I want to become a professional like a CA or a doctor or a lawyer who want to have their own practice. So that would be a professional income. So whatever is the type of your income, be it a salary or a professional or a business income, ultimately that is the primary income that you'll be having. But along with this, as I said, you will be also investing your savings. So investments are also going to give you something back, which either will be in the form of interest or it would be in the form of returns. Now, what is the difference between interest and returns? So we'll start with a simple thing. Let's say you invest 100 rupees and you get an interest. Now, what is interest here? It is guaranteed in nature. So when you invest that 100 rupees, you know, for example, you are going to get 6% interest. So 6% is guaranteed and given to you in writing. on a piece of paper, of course, with all the different things that will be mentioned along with the investment. So the period would be there. You will have the amount that is invested, the name of the person, the nominee, and so on and so forth. So that is interest guaranteed. On the other side, you may also be investing money. I will be talking about the types later on, of course. So this investments may not give you an interest. So then what are you going to get? You are going to get returns. Now, what are returns? Returns are something which are not guaranteed in nature. So what does it mean? It typically means that you may get a positive return, which is profit, or you may also get a negative return, which is loss, or you may get something which is no profit, no loss. So in finance, we may call it as break even. So if you get a positive return in this, then you are supposed to pay a tax on it, which is called as capital gain tax. So what is capital gain? Is the profit. So if you invest 100 rupees and at the time of selling, if you generate or sell it at 125, so 25 rupees is your profit, which is capital gain. So now you have to pay a tax to the government, or rather to the income tax department, on the profit that you have made. That is the capital gain of 25 rupees as per our example. So now there are two types of taxes that may come up here. One is a short-term capital gain tax, and second one is a long-term capital gain tax. So now what is short-term is typically if the profit is generated within 1 year from the date of your investment, then it will be called as short-term capital gain. And in this case, you will have to pay a 15%, that is 15% tax on the profit amount. On the other side, if you sell your investment after 1 year, till whatever n number of years, then you would have to pay long-term capital gain tax. But in this case, for the first 1 lakh rupees of profit, you don't have to pay any tax. That is in long term. Short term, any amount, 15% on the profit. Long term, for the first 1 lakh, no tax to be paid, but above 1 lakh, if you generate any kind of income in terms of profit or dividend or anything, then it would be called as your long-term capital gain tax, and you have to pay 10%, that is 10% as the long-term capital gain tax on the profit amount, that is on the capital gain amount. So typically what we understand here is income tax as a concept is also what you need to check, because ultimately that is also one or the other type of expense, indirect expense, I would say, that is going to get reduced or deducted from your income. So that is also what you need to understand. So I'll take a 1 minute break here to just take a feedback from you about have you understood the topic on tax, because tax usually is a comparatively difficult topic. So I would just request all of the participants to confirm in the chat box. If you have understood this topic, you need to type tax, that is TAX, in the chat box for you to confirm that you have understood this topic on taxation. So I request all the participants, whoever have understood the concept that we just discussed on tax, to type in tax, that is TAX, in the chat box to confirm that you have understood this topic. Any doubts, any questions at the end of the session? I'll take a Q&A from you all. Questions and answers, questions from your side, answers from me. We will put it up at the end after the session. So anyone who's not understood, you can ask your questions later on. Right now, we will complete the session first, and then I will take your questions. So whatever doubts you have, of course, you may write it down or remember it so that you can ask it in the end or at the end of the session. So thanks a lot. I could see a lot of responses with regards to this topic. So now let's proceed to the next thing. So as I said, many of us as human beings, what we think that first we should be spending, but unfortunately that is not what should happen, because if we first spend and then we move on to savings, chances are many a times we may not be able to save, because jo haath mein paisa aaya hai, probably we would just spend it off. So rather than doing that way, it is always better that you should first keep your money aside for your savings. Indirectly, now what will happen is a less amount of money will be left in your hands, and which means you will now only prioritize and spend on things which are actually going to be required by you. And that is exactly what you should be looking for. And this is not only what I am saying as the speaker for today's session, but also I want you all to know that Mr. Warren Buffett, who is considered to be the modern day father of financial markets, Mr. Warren Buffett also is saying the same thing about changing our mindset or our mentality for putting up your savings aside first and then moving on to your expenses. Now, only saving is also not going to be enough. As I said, if you save 40% of your income and you keep that 40% aside, okay, you've done a good thing, agreed. But that 40 rupees or 40% is not going to increase in its value. It's just going to remain 40. So increasing that rupees 40 or 40%, the value of that 40% is also very important, which can only happen if you go on and invest it. So investing is also very, very important. So now the question comes, where should you invest? So you should invest in an asset, or rather an investment product, which will give you returns or interest, that is increase in positive valuation over a period of time. So what are the different types of assets that we can talk about? So let's start with a basic asset or a basic investment product. First one, and a very simple and most popular product across Indian markets, is fixed deposits. Now, what are fixed deposits? First of all, these are products which we may go and we may approach a bank or a financial institution, and we can give them the saving amount, whatever we want to save and invest, and put it in a fixed or a term deposit. Now, what is it? It is basically a certificate, that is a fixed deposit receipt that will be given to you, which will clearly tell you how much money you have invested and how much money you are going to get at maturity, that is the end of the period, whatever period you have selected, and the interest rate is also going to be mentioned there. Similarly, if you don't give the money to a bank, but rather you give the money to a public sector company. Now, what is a public sector company? It is basically a company where public shareholding will be the highest. And this company is particularly giving you a fixed deposit, but now they don't call it with the same name. They would call it a bond. Point is, you have saved money and given it to a public sector company, and you get a bond. If you had given it to a corporate, that is a private sector company, then the third product comes in here, which is called as a debenture. So debenture is typically similar to a fixed deposit or a bond, but the only difference is that you have given the money here to a private sector company. So I repeat, if you give money to a bank, fixed deposit; if you give money to a public sector company, bond; and if you give the money to a private sector company, then a debenture. All three would offer a interest rate which is guaranteed in nature. But please remember, even when I say guaranteed, it definitely means it is written or given to you it in writing, but there will be some or the other type of risk, and that risk you always have to take into account. People think fixed deposit hai to koi risk nahi hai. Unfortunately, that is not so. So always remember to check what is the other type of risk that may appear there. And always, a simple thing you all need to remember is diversified. In short, spread your investments in different banks or different institutions so that the risk gets diversified. Don't put your entire saving or entire money in one single product of one single institution. I repeat, diversified so your risk would get reduced. So out of fixed deposits, bonds and debentures, the least amount of risk is what you would see in fixed deposits. Something higher, that is medium risk, you would see in bonds, and the highest amount of risk you would see in debentures. And in finance, a simple line or a simple sentence goes in this way: higher the risk, higher is going to be the interest amount. Means risk in fixed deposits is low, so interest also will be low. Risk in bonds is medium, so interest rate will also be medium, and risk in debentures is high, so interest rate will also be high. But I repeat, everybody individually has to check, analyze, assess the risk of their individual capacity. Don't look at others. Your friend may be investing in bonds or debentures, but he or she may have a higher risk appetite, but does not mean you also have it. So always remember to confirm, check, analyze what is your own individual risk capacity or appetite, and only on the basis of that you should proceed to do the respective investments. So these are comparatively lower risk products. Someone may say, sir, I want to take a very high amount of risk, because high risk would mean high profit. Okay, no problem. So in that case, you may move towards equity markets. So what are equity markets? Equity markets are typically where you will have, or rather you will have to invest in equity shares. So some of you may say, sir, please tell me right from the beginning, what exactly is equity shares? So, okay, we'll start with scratch. Equity shares are typically where you will have to invest a particular amount, and that will give you a part ownership of a company. So let's take a simple example. Let's say there is a company whose valuation is 100 crores and you want to invest in that company. There are two possibilities. One is you may give the entire amount of 100 crores and buy the entire company, but which is pretty high. Maybe many a times almost difficult or impossible to do that. So what you can do, so other way around is, rather than investing such a huge amount, you can buy one small part of that company, or rather that company's valuation or capitalization, which is what we call as a share. So equity is the valuation of the company, and share is one small part of the valuation or ownership of the company, which is why we call it as an equity share. So equity share can be as low as rupees 1, or sometimes even in pesos, or it can be as high as in thousands also. So everybody of you, whoever wants to invest, first thing always need to remember is risk is pretty high here, which means there will be returns. There is no interest here. So it may be positive, negative, or break even, which is no profit, no loss. So only if you want to take the risk, you should proceed to equities, and then for which you would have to have a specific account, which is what we call as a demat account and a trading account. So demat is where your shares would lie, and trading is which will be linked to your savings account, which will ultimately increase or decrease on the basis of buying or selling of the respective shares. So if you want to take this risk, only proceed here. But if you don't want, then you can move to the next category, which is mutual funds. So now mutual funds is the third category, which basically would be applicable for people. Some of you may say, sir, I don't know which share to buy. Some of you may say, sir, I don't have the time to analyze. Some of you may say, sir, I want to invest in bonds or debentures, but I don't know which company's bonds or debentures should I invest in. Okay, so for all these type of people, these are general questions. It's not something which is out of the box, or it is not something which is unusual. These are layman questions or layman problems that are there. So for this kind of a situation, we have mutual funds where, rather than you directly investing in bonds or debentures or equity shares, you give the money to an expert company, which is a mutual fund company, and mutual fund company further would give that money to a fund manager, that is typically an asset management company, which will further decide, because they're experts, they are academically and you can say qualified, particularly to take decisions about where to invest, how much to invest, how much time to invest, and so on and so forth. So all these expert, you can say, questions that you had actually would be answered and taken into account by this mutual fund company, and they would further take the decisions to sell or buy the respective whatever shares or bonds or debentures. So now here in mutual funds, you have three different categories. The first one is which would have a comparatively high risk, which is what we call as equity mutual funds. What is this? Is the amount that is invested here is going to be invested in equity shares. And that is why the risk comparatively here is going to be very high. Some people may say, sir, I don't want to take a risk. No problem. You may invest in the second type, which is called as a debt or a fixed income mutual fund scheme, which is what is particularly the money that you have invested will further be invested into bonds or debentures or similar securities, which is comparatively with the less amount of risk. And some of you may say, sir, I want to have an exposure of both the things together. Okay, absolutely no problem. You may go on and invest in the third type of mutual funds, which is typically what is called as a balanced or a hybrid mutual fund. Now, what is balanced or hybrid mutual funds is some amount would go in equities and a balanced amount would go in bonds or debentures or similar securities. And that is where you would get an exposure of both the markets on a, or rather at the same time. And that is why it is called as hybrid or balanced mutual funds. So in investments in mutual funds, you'll have two main mediums or two main ways how you may invest the amount. So the first way is a lump sum investment. Now, what is a lump sum investment is typically when you feel that you want to invest at one single go or one single shot. In this case, the minimum investment is going to be rupees 5,000. Once 5,000 is invested, you may just hold that for whatever period you want, or alternatively, you may just go on adding some amount also. But adding additional amounts after 5,000 is not compulsory. That is completely at your own will. If you want to add, only then you have to add. Otherwise, you can just invest 5,000 and keep silent and keep waiting for whatever period accordingly you want to wait, and then withdraw the money or redeem the money. On the other side, if you don't want to invest at one go, but rather you would want to invest in installments, which is also what I would advise most of you to do, particularly because that will help you on two counts. The first count that is going to help you is the cash outflow is going to be less because you are investing small amounts at regular intervals or installments. That is first benefit. And the second benefit is as you're investing at different time intervals, it automatically would mean it will also help you to lower or average out the cost of your investment. And that is exactly what SIP offers. SIP is a systematic investment plan where you go on investing a minimum amount of 500 rupees per month, and which can go on for whatever X period that you may want to invest in. So that is what is meant by mutual funds. And now we move to the last type that I'm going to talk about today, that is real estate. Many a times people ask, real estate is a very, very good investment, sir. What do you feel? What are your thoughts? So real estate as an investment is good, no problem. But point is there are 2-3 things that you should be always doing and checking or verifying or analyzing. The first and the most important thing is, are you buying real estate to live in that property or is it for an investment? Because real estate is shelter, that is food, clothing and shelter, which is primary needs. So if you are buying the property to stay there, actually stay there, then it is not an investment. It is your primary need, which is shelter. But if you are buying it to, or rather buying it as an investment that you are not going to live there, but it is going to be a, you can say, second home or a third home for you, then it makes you to think about some factors. The first and the most important factor is the liquidity. The liquidity of real estate is pretty low. What is liquidity is how soon can you sell it and convert it into money. The time taken for you to sell real estate properties may be comparatively high because other products that I've told you, liquidity is very high because you can sell it anytime and you can get the money as soon as possible, and of course depending upon the market conditions or the market valuations. But real estate properties may take comparatively higher time, which is what liquidity is the factor which is low, which means it takes a higher time or a larger time period to sell the property. Second point is, if you're buying it as an investment, you don't need to keep it vacant because then you should go on. As I said, the asset is typically an investment. So asset means the valuation or the appreciation should take place. So if you are keeping it vacant, you are not getting anything out of it, because on one side appreciation may happen but liquidity is low. But on the other side, if you give it on rent, at least you will go on getting some cash inflow, which is going to help you over a period of time also, because ultimately you also need to maintain the property, you need to also pay some taxes and so on and so forth. So these are two main factors that you need to understand. And of course, third and the most important one, also one of the important factors, is the amount that you need to invest. Comparatively, in all the other products, the amount is going to be lesser, but real estate, the amount is going to be pretty high. So that point also you need to understand, that do you want to invest so much amount in one single, you can say, property or one single asset? Is it really required or not is also what you need to understand. So these are some basic investment products that I spoke about right now. So if you have understood all of them, please type ASSET, that is ASSET, in the chat box to confirm that you have understood this particular concept on investments, which is types of assets that we have just discussed. So kindly please check and accordingly understand, and please type in your answers to give your feedback about this particular topic on assets. So if you have understood this concept, please type in asset, ASSET, in the chat box to confirm your understanding about this topic. As I said, at the end, I'm going to take all your questions. So whoever has any doubts, any questions, you can keep it with you or remember so that you can ask your doubts at the end of the session. So thanks a lot once again for your feedback about this topic on assets or investment products. So now once you know about this thing, the next thing that you should be knowing is about asset allocation. So as I said some time back, diversifying your investment is very, very important. So diversification is typically what is done through asset allocation. That is, rather than investing your entire money at one go, it is always better to diversify it or spread it in different types of investments. And that is what will help you and you can achieve through asset allocation. So while doing asset allocation, you need to check some basic factors which go along with asset allocation. The first and the most important factor is what is the goal? What is the financial goal for which you are investing? Some of you may say, sir, I want to invest for my future. Some may say, I want to buy a house. Some may say, I want to buy a car. Some may say, I want to get married. So marriage also is going to require an expense. Some may say, sir, I want to save for my retirement, which is also very, very important. Some may say, I want to save for my emergencies. Of course, with COVID times, we don't know. It's absolutely an uncertain time for most of us today. Way back in 2018 or 19 or early 20 also, in Jan or Feb, nobody had even thought about any kind of an emergency situation that may arise, like a COVID, for example. Many people have lost jobs. Many people are working on salary cuts. And that is exactly a prime example of an emergency. So saving for your emergency, creating an emergency fund is also very, very important. So these are different financial goals. Of course, many of you may have already thought about these things, and also as you go on with your education and complete your education, start earning, you need to start planning for your retirement also. Many people think, why is retirement planning so important and why should you start early? Is because many people think that retirement, अरे बहुत time है, बाद में देखते हैं, बाद में सोचते हैं. But point is how the work-life balance goes on and how the time passes, we don't even understand. And suddenly retirement hits us on our face and we have not even planned for it. So point is, start early as soon as possible once you start earning. And that is why your financial goals are going to be very, very important. Because once you have it in your mind, only then will you understand how much period you have particularly to save money for it. And accordingly, you can slowly and gradually start planning. On the other side, you should also check your cash flow position, because ultimately the cash flow position is also very, very important, because that will help you to understand how much income you are generating and how much can you save from it, particularly for your financial goals. Along with that, we spoke about liquidity, we have spoken about taxation. These factors are also very important. Also, we have spoken about ease. Ease is particularly, should you invest in lump sum or should you invest, that is one time, or should you invest in installments? That is something like an SIP, as we spoke in mutual funds. That is the ease of the investments. Along with that, we should also understand about transaction cost. Now, what is transaction cost? It is typically that when you are doing the investment, there may be some things that you need to understand. One major factor that you need to understand here is that there may be an additional expense that you may have to incur at the time of that investment. So that additional expense may be in the form of brokerage, it may be in the form of commission, or sometimes it may be in the form of an additional service charge. So that is definitely going to add to the cost of your investment, which is what you need to understand. And you need to check what is and how much is that investment particular cost or transaction cost along with the investment cost, that is the principal cost that you are going to incur. Because ultimately, if your cost increases later on when you sell it, and if you have a profit, your profit would be brought downwards. So that is also what you need to check along with the other factors. Next is the most important thing that you need to understand, that legality of the transaction is very, very important. Many people ask questions, sir, should I do this? There are so many things that we can do with regards to investments, but is the transaction legal is the first thing that you need to ask. Because if the transaction is not legal, and ultimately sometime later if you face some problems related to it, then you would have no place to go with regards to your complaint, because it was not legal. On the other side, you should also check that it is regulated by some institution. Just like, for example, capital markets are regulated by the Securities and Exchange Board of India, that is SEBI. So that is also what you need to check. Next is, whenever you are investing, try to invest in a disciplined manner, that is with a defined frequency of time. Some may say, sir, I want to invest weekly, some may say monthly, or some may say quarterly. No problem. Whichever of the options you take and decide, you may proceed with those options, but remember to stick to that option and put it in place, and most importantly, do it for a longer duration of time. Now, why longer duration of time is particularly because that is going to help you to get the benefit of something which is called as compounding factor. Now, what is this compounding factor? Is when you go on to invest for a longer duration, the amount that you are going to get as interest, for example, is also going to attract more interest on it. Let's take a simple example to understand. Let's say you invested in a bond or a debenture. Let's say rupees 100 was invested. So on 100, let's say you get an interest of rupees 5. So the value actually now rises to 105. Next, interest that you will get now will not be only on the 100 rupees, that is principal amount, but also on the 5 rupees of interest. Let's say rupees 8 you get on 105. So now the value increases from 105 plus 8 to 113. Now the next interest that you will get will be on 100, that is principal, on the first interest of 5, plus on the second interest of 8, that is on the entire amount of 113, let's say rupees 12. So now valuation rises from 113, 113 plus 12 to 125. So if you check the growth, the first we started with principal amount of 100, then we went to 105, that is 5 rupees rise, then 113, that is 8 rupees rise, and then 125, that is 12 rupees rise. So 5, 8, 12, and so on and so forth. As the value increases, or rather as the period also increases side by side simultaneously, the valuation is going to rise, and that is exactly what compounding will offer as an advantage to increase the valuation of your portfolio or your investments with the period of time. And that is exactly why in the field of finance, compounding is considered to be the 8th wonder in the world. So try to invest disciplined manner, that is regularly in a fixed or whatever frequency you decide, and most importantly, do it for a longer period of time. So that is always what you should remember, and accordingly you should be planning for. So if you have understood this concept, kindly type in AA, that is asset allocation, in the chat box to confirm that you have understood all these factors that we've discussed under asset allocation. Any doubts? As I said at the end of the session, you can ask your doubts, ask your questions. But right now, please type in AA if you have understood the concept and the factors that we have discussed under asset allocation, that is still compounding. So kindly type in AA so I can know, I can understand that you are all with me in the session. And now we will slowly and gradually move towards the winding up of the session. That is slowly and gradually. Second last, third last topic is what now we will start off, and we will then slowly and gradually move towards winding up of this session. So right now, I would also like all of you to please start filling in slowly and gradually the attendance and the feedback. So I'm sharing the link for the same in the chat box. So if you see the chat box, I've just shared the link. You may please start filling up your attendance and feedback. The same link has to be used for both. You just need to fill up the form, that is the Google form that is there for both of them. So please start filling up the respective things. So you can start with the first part of that, which is your attendance, and the second part is the feedback, of course. So I'll move on to the last part of the session, the last topic, and then we'll move on slowly to the winding up of the session and your doubts and your questions. So now we move to something also which is very important, which is precautions that you should be taking when you're investing in the capital markets. First and the most important thing is, whenever you are dealing with anybody, that is any intermediaries, that is brokers or sub-brokers, always remember to check whether they are registered or not. So a simple thing that you can do is ask for the registration number, or alternatively check their name and Google it, or alternatively check it on the respective website of the regulator, in this case SEBI for that matter. On the other side, also remember that whenever you are dealing with these people, their receipts also you should be getting. So whatever transactions you do, you should get a receipt for the transaction. In the capital markets, the receipt is called as the contract note. So whenever you buy or sell any kind of equity shares or bonds or debentures, you will get a contract note. And receiving the contract note, which is a receipt in a simple manner, is your right as an investor. So if you don't get it, you can always complain to the respective organization. If not, they are not entertaining your doubts, your complaints, you can approach SEBI and complain to the respective authority, that is the regulator. In India, we get a lot of information. WhatsApp is one major, you can say, place or medium through which we get this information. So WhatsApp is also now today called as a WhatsApp university. But point is, in spite of it being called as a university, it's not actually a place or a medium where you would get verified information. So whatever information that we are getting, so information is a lot. Information is available in bulk. But point is, the information that we receive through something like a WhatsApp or a Twitter or a LinkedIn or a Facebook or Instagram, or simply we read it in newspapers or watch it on television news channels or some websites or some blogs, we read it, or somebody just tells us out of, let's say, a discussion that we're having with our friends or relatives. Point is, information is there, of course, but verification of that information, analysis of that information, verifying whether it is correct or not, true or not, is very, very important, because ultimately on the basis of that information, we may be taking some investment decisions, and those investment decisions may go wrong if this decision, or rather this information itself, was not true. So please remember to verify, analyze the information, and only then take your respective decisions. Also, some of you may say, sir, I am not able to take it because I'm not an expert. Absolutely agreed. If you are not experts, then you need to seek help. That is, you need to ask some experts. If you are not able to do the, you can say, analysis or find the information or verify it, no problem, but you then need to open your mouth, approach an expert and ask those people, and depending upon their whatever opinions or recommendations, accordingly you can then take your respective decisions. Also remember that wherever you see a high profit, high interest, high return, immediately a bell should ring in your mind that suddenly that particular point, that is that particular, you can say, interest, is also attracting a lot of risk. High risk would definitely go directly in line with the high interest or the high profit or the high returns. So immediately you should also remember that risk is also there. Suddenly when the prices rise or fall, many people think, "Arey, price बढ़ रहा है, so I should buy, price गिर रहा है, so I should sell." Don't do that. Try to understand the reason behind it, why is the price rising or falling, and on the basis of that, then you can take your respective decisions. Please remember to check the reasons behind these things. And as I said, if you don't get it, you can ask some experts and then take your respective decisions. And most importantly, try to avoid doing any transactions in cash, particularly because in the capital markets, cash transactions are absolutely banned. You cannot, or you are not allowed to do transactions in cash. So if not cash, your question may be, sir, then how we should do? We can use the traditional form, of course, which is something like a check. or a demand draft for that matter. Or alternatively, we can use the latest mediums that are available, like a NEFT or an RTGS or a internet banking transaction, or we can use something like UPI if that is available, or NACH that is available, and so on and so forth for the respective transactions. So always remember to have all these precautions in place, and accordingly only then you should proceed to take your respective decisions with regards to having a future, a financial future, which is a successful financial future. And most importantly, try to learn from the people around us, because many people are continuously going on taking investment decisions, and we may be discussing about it. So your friend may have taken some decision which may have been correct or wrong, whatever. Similarly, you may have taken some decision which may be correct or wrong. Similarly, there may be some information available with people around you, or you may have some information, but please remember to share it or ask it from, or you can say discuss it with others, so that this information will go on getting transmitted from one place to another, from one person to another, and accordingly we can learn from other people, and also people or other people can learn from us. So don't look at the negatives that people have or what people may have in themselves, but try to take the positives. Try to learn from these people and try to become a learning machine. And this is also what Mr. Charlie Munger, similar to what Mr. Warren Buffett is there. Charlie Munger is also one of the investment gurus, you can say, or investment respected people from the investment industry abroad. And he also is saying the same thing with regards to becoming a learning machine, trying to take positives from the people around us. So this is most of what I wanted to share with you all. And of course, once again, I like to point it out that this session was brought to you by, or was done in association with the Bombay Stock Exchange Investors Protection Fund. And I hope that all of you who are a part of this would definitely have gained some knowledge, some insights, some information, quality information from what I just shared with you all about your investors' awareness, particularly creating awareness about your financial future, your financial life, financial decisions, which will help you to lead a successful financial life further down your career, or maybe your professional or your personal life. So right now, once again, I pointed out that you need to give your attendance and feedback for today's session, for this session on investors awareness that we had. I've just shared the link once again in the chat box. I can see around 129 participants, and 81 of you have given the attendance. That is the attendance and the feedback. Please remember to give it immediately, because the link would be deactivated at 12:15. That is approximately 20 minutes from now. And if you don't give the feedback, that is the attendance and feedback, you will also not be getting the certificate from the Bombay Stock Exchange for participating in today's program. So for getting the certificate, you need, that is the e-certificate, you need to give your attendance and feedback in the respective form that I have already shared with you. So 20 minutes to go for the link to get deactivated, and around I could see around 50 of you around have still not given it. So please give it immediately, so that you are eligible to get the e-certificates later on from the Bombay Stock Exchange. So I'll just keep the link open. I repeat, the link is going to be open for the next 20 minutes till 12:15. It's approximately around 5-6 minutes to 12. And please give it till then, so that later on we can, or rather you all only can get the e-certificates for today's participation. Okay, so now let's move on to your questions or your doubts if you have. So I give back the mic to Vishaka ma'am, and you can take it over from here. Thank you.
Thank you, sir. Thank you so much for such a short but very informative session, I would say. Now, for the Q&A, I have already received few questions. Others, if you have any questions, you can please put them in the chat box, or if you want to ask it directly, raise your hand. I will unmute you so that you can ask directly your question to sir. So I have a question from Shubhraj. Is DP charged on short term?
Sorry, I didn't get you.
Is DP charged on short term?
DP, what is DP? Are you talking about depository participant?
Shubhraj, could you clarify that once? Till then, I think we can move on to the next one, sir.
Yeah, Shubhraj is saying yes. So DP is basically a depository participant, and DP is, in simple words, we call them as brokers or sub-brokers. So there are some DP charges that are applicable, and it is charged on the basis of your portfolio. And second charge that is applicable there is the AMC charge, that is annual maintenance contract or charges. So that would differ from broker to broker or DP to DP. So I hope that answers your doubt, Shubhraj.
Thank you, sir. Next, Adil is asking, is SAP useful and safe?
SAP as in SIP, yeah. So SIP is basically definitely useful because, as I said, one, it helps you to reduce your cash outflow because you do it on a small or an installment basis. And secondly, it is safe because rather than investing at one go, you would also have to invest in installments, which will help you to average out your cost. But all said and done, as I already said, mutual funds completely, if you say safe as in absolutely no chances of loss, if you feel that is so, then it is not so. As I said, SIPs or mutual funds for that matter are also subject to market risks, which ultimately would mean that you may also have a situation where you may suffer a loss. But to reduce your losses or to reduce your risk, as I said, you can go through the SIP medium, which will help you to reduce or diversify your risk, but eliminating the risk would not be possible. So accordingly, you may analyze your risk-taking capacity and then you may proceed to doing the respective investments. I hope that answers your doubt.
Thank you, sir. After that, Rohit is asking, is investing in currency or forex market is good source for investing than the shares and mutual funds?
See, investing in currency or forex is a good investment, of course, but provided you know everything in and out of that market, because comparatively, currency or forex market would be complicated as compared to even mutual funds or shares for that matter. So the basic one, as I said in the session also, that if you are a first time investor or if you have never taken any kind of exposure towards capital markets, maybe you can start with comparatively less risky, or you can say risk related mutual funds. Slowly and gradually you can move on to the shares, and slowly and gradually then you can move to the other segments of the capital markets. Going directly towards currency or forex, I would feel, or I would say, that would be more, or rather quite more complicated, and only if you know in and out of that market you should proceed for it. Otherwise, as I said, go on taking a small step at a time, and then slowly and gradually you can start getting exposed to the other segments of the capital markets. I hope that answers your doubt, Rohit.
Yes, sir. Thank you. Then Sanmeet is asking, the sentiments, just a sec. The sentiment of future growth are effectively seen in the market nowadays. Then the news of third wave should have impacted the market by now. Still, there is no sign of it. Any particular reason?
To be honest, any news particularly always would not have an impact on the markets, because many a times we, in finance language or market terminology, we say that it is the news is already factored. In simple words, the market is already accustomed to a lot of changes that has happened over a period of time with regards to COVID, and with new variants coming in, and new, you can say, negative factors or positive factors about good things, something like medicine coming out, or maybe you can say a dose for the vaccination coming out, and so on and so forth, is definitely going to have an impact. But more or less, the market seems to have factored in the information with regards to the situation about COVID, and that is why you would not see much impact on the markets with regards to the third wave, is what you were asking, I believe.
Yes, sir. I hope that's answered. Yes, she's responded. That's answered her question. Thank you, sir. That's all I've received in the chat box. Anybody else wants to ask anything, you can raise your hand, or else we move on to the next segment.
Okay, so I think all your doubts have been answered, and I believe most of you would have also filled up the feedback form, that is the attendance and the feedback form. So now I'll just move on to tell you the process to get your e-certificates. Vinay sir and Vishaka ma'am, kindly you also note it down so that you can
Yes,
help out the students later on. So I'll just share the screen. So you see a website on your screen now. That is the link of the website. So kindly note it down, all of you, all the participants. Vishaka ma'am and Vinay sir, you also please note it down so that you can help out others later on. So
yes, sir.
you need to
So,
go to this. Yeah, ma'am.
sorry to interrupt. Would it be possible to put it in the chat box?
Uh, yeah, I'll just try putting it up in the chat box.
They could just save it then.
Yeah, I'll just try. Yeah, so I've just shared the link in the chat box. I hope
Thank you,
you
sir.
get the link. So this is a website which you are going to access to get your e-certificates. So you need to go to this website tomorrow at 5 p.m. I repeat, you need to visit this website tomorrow at 5 p.m. And once you go to this website, on the right hand top side, you will see sign up. So click on sign up. And once you click on sign up, your information will be asked. The first will be your personal information, that is full name, mobile number, email address. Please remember that the name that you have entered today, the same form has to be entered there, as in full name or your only name or your mother or father's name, whichever way you have entered it. Please ensure that you write it in the same format. Below that, there will be type of program. So you need to select investor awareness program there. I repeat, type of program will be investor awareness program. On the right hand side of it, there will be your academic background, your institute name. So institute name, once again, you have to just select it from the drop down box, and your academic background, whatever or whichever academic background you are. If you see that in the list, you can accordingly select it. If you don't see that in the list, don't worry, you just need to select BSc IAP. You can see I have typed it in the chat box. If your academic background is not in the drop down box there, in the list there, then you just need to select BSc IAP there. And below that, you will have to enter a code. I repeat, below that, you'll have to enter a code. So the code is going to be today's date. So in this format, I'm just typing it out in the chat box. It will be 14072021. I repeat, the code will be 14072021. And below that, you will have sign up. Just click on sign up. Within 24 hours after verification of your information, I repeat, verification of information will happen through the feedback form and the attendance, the link that I shared. If you have entered your details there, only then it is going to be verified, and directly on your respective email addresses, you will get the e-certificate from the BSc IPF, that is Bombay Stock Exchange Investors Protection Fund. Please ensure that you do this process tomorrow, because within 24 hours from tomorrow, the link will get deactivated, after which your institute name will not appear there and you will not be able to get the e-certificate. So I repeat, starting tomorrow at 5 p.m. and day after tomorrow, it ends at 5 p.m. So kindly do this process without any mistakes, because you only get one chance to fill up all the details correctly and get the benefit of the e-certificates. So I hope all of you have noted it correctly and have got it. Any help that you would require, you can approach Vishaka ma'am or Vinay sir. I hope Vishaka ma'am and Vinay sir have also noted it down.
Yes, sir.
Yeah, so thanks a lot. So that's all from my side. And once again, before I wind up, I would like to thank the entire management of the college, of the institution, and definitely Vinay sir and Vishaka ma'am to put this event together. And all of you also, please take good care about yourself. And if you're eligible, kindly also try and get vaccinated as soon as possible. And of course, go on to follow the SMS guidelines. That is, SMS today is something different, not short messaging service, but today we have it in the form of sanitizers, masks, and social distancing. So follow the SMS guidelines and take good care about yourself, and stay safe and stay healthy. Thanks a lot. And I hand it over to Vishaka ma'am. Thank you.
Thank you, sir. We'll now move on to the last segment, the vote of thanks. But before that, I just want to tell participants, after that, we'll be having a group snap. So please wait for that. And now I request Nimesh, sir, to kindly give the formal vote of thanks. Over to you, sir.
Yeah, thank you. Am I audible?
Yes, sir.
Yeah, good afternoon, everyone. On behalf of Lala Lajpat Rai College, I would like to thank Amogh sir to share his insight about the awareness. Sir has discussed some important points. Like sir has said about the discipline in investment is very important. One has to be very disciplined while investing in various sectors. Sir has also thrown some lights that the people should take precautions while investing. Sir has also said about one important thing: whatever investments are to be made, they it should not be in the form of a cash. It should be some different modes of payments, which are the legal modes of payments which are available in our financial systems. Sir has shared one important formula that earning minus saving should be equal to your spending. We should concentrate on our savings first, and then we should think about the spending. In terms of investment, sir has also discussed about one should focus on the post-tax returns. One should not just put or invest the money just by discussing with friends or anyone. The person has to think on the various aspects. Post tax returns is one of the important factor which sir has said. Sir has also thrown some important lights on the different types of the mutual funds which are available in the market, like equity mutual fund, debt mutual fund, hybrid mutual fund. So all this important factors sir has highlighted. So I once again like to thank sir for sharing his view. I would also like to thank the management of Lala College to for giving us the permission to hold the workshop on investor awareness. In addition to this, I would like to thank the principal ma'am, the vice principal ma'am, and last but not the least, the student volunteers, specifically Amrin and Sanmeet, without whom this workshop would have been difficult to organize. So thank you everyone. Thank you once again, sir. Back to Vishaka ma'am.
Thank you, sir. That's all. I now request everyone to please turn on your camera so that we can take a group snap. Sanmeet, shall you please do that? Even I'll take a snip. Amogh sir, can you also please turn on your camera? And if you, I request you to stop sharing the screen.
Yeah, just a minute.